Dear students, we'll solve one more problem on preparation of final accounts of SO Trader, and this is video number 7. Let us go ahead with the problem. From the following trial balance and other information relating to the business of a retailer, you are required to prepare trading and profit and loss account for the year ended 31st December 2019 and balance sheet as on that date. So trial balance is given, followed by that adjustments are given. Let us take up the adjustments one by one. Closing stock on 31st 12 2019 35,000. The treatment is this should be credited to trading account, and then it should be shown as an asset on the asset side of the balance sheet under current assets. So let me repeat: credited to trading account, then shown as an asset on the asset side of the balance sheet. Purchases include goods worth rupees 2,500 for private purpose. Actually, this is nothing but drawings. Then it is to be taken as drawing and deducted from capital on the liabilities side of the balance sheet. And it should be deducted from purchases in trading account. Let me repeat, it should be deducted from purchases in trading account, and it is taken as drawings and then it is deducted from capital on the liability side. Actually, the adjusting entry for that is drawings account data to purchases. Bills receivable rupees 2,000 dishonored, but no entries are made in the books. Actually, when you receive the bill, the entry you are going to make is bills receivable account data to sundry debtors. But when it's dishonored, the entry will be reverse. That is sundry debtors account data to bills receivable. So sundry debtors account should be added with 2,000. So in the balance sheet, sundry debtors add 2,000 regarding bills dishonored. And as far as bills receivable is concerned, say you have got bills receivable here 5,000. From that you have to deduct these 2,000 rupees. Okay, so deducted from bills receivable, the balance sheet, and added to sundry debtors of 22,500 in the balance sheet. Goods supplied by Ganesh Stores worth rupees 2,500 on 29/12/2019 were not recorded, not entered in the books. Goods supplied by Ganesh Stores. That means there are suppliers, and this is credit purchases. So it should be added to purchase account and added to sundry creditors on the liability side of the balance sheet. So entry will be purchase account debtor to Ganesh Stores. Ganesh Stores are taken under sundry creditors in the balance sheet. Purchases will come to the trading account. In the trading account, you have to add 2,500, and in the balance sheet, the sundry creditors, you have to add 2,500. Write off bad debts 1,000 and provide for reserve for doubtful debts at 5%. Okay, actually bad debts are debited to profit and loss account. Find out whether there are bad debts in the trial balance. If there are bad debts, to that you have to add that. So bad debts in the trial balance, I don't think you find bad debts in the trial balance. So it should be debited to profit and loss account, and again in the balance sheet it should be deducted. And in this problem there is no old reserve for bad debts. Therefore what you have to do is you have to calculate 5% of debtors, but after deducting 1,000. Debtors value is 22,500. 22,500 minus 1,000, so 21,500. On that you have to calculate 5% provision, and this is to be shown like this in the profit and loss account. Bad debts should be shown to the outer column, and even reserve for bad and doubtful debts or reserve for doubtful debts should be shown to the outer column. But if there is old reserve, what you could have done is bad debts, add new reserve less old reserve. The remaining value you should have shown to the outer column of the profit and loss account. But here there is no old reserve. Therefore, directly you can debit to profit and loss account. Similarly, in the balance sheet, sundry debtors, of course, other adjustments are to be made, and at the end, bad debts must be deducted 1000, and then new RBD, that is 5% created on the sundry debtors, should be deducted, and the remaining value should be shown to the asset side. Goods invoiced rupees 5000 was sent to customer on sale or return basis on 20th 12 2019. The customer still have the right to return the goods. The rate of gross profit was 1/5 of sale. So goods were sent. In that case, you are recording the entry debtors account debtor to sales with 5000. On 31st December, you cannot take it as actual sale. So you have to reverse the entry. Therefore, the entry will be sales account debtor to debtors account. So you have to deduct 5000 rupees from sales in the trading account, and in the balance sheet you have to deduct 5000 from sundry debtors. Let me repeat. In the trading account, from sales you have to deduct 5000, and in the asset side of the balance sheet you are deducting 5000 from sundry debtors. These goods are not taken as sales, therefore that has to be added to closing stock. So closing at when you are adding that to the closing stock, you have to take it at cost price. What is the cost of that? So selling price minus profit is equal to cost. Here it's given the rate of gross profit was 1/5 on sale. So 1/5 on sale means 5000 into 1/5. Therefore that comes to 1000. That means the cost of that is 4000. 4000 should be added to closing stock in both the places. One is in the trading account and again in the balance sheet. Let me repeat now for the treatment for the adjustment number 6. See, when you send the goods on sale or return basis, the entry you are making is debtors account to sales. But on the balance sheet date, still the customer has got the right to return the goods. You cannot treat that as actual sales. So you have to reverse the entry. So the entry will be sales account to sundry debtors. Therefore, the 5000 should be deducted from sales in the trading account and from debtors on the asset side of the balance sheet. Then such goods are to be taken to the closing stock at cost. What is cost? Selling price minus profit is equal to cost. Here selling price is 5000. Oh, and 1/5 of that is profit. That means 1/5 of 5000 is 1000. 1000 you deduct from 5000, so you get 4000. So 4000 should be taken as closing stock. And closing stock should be treated twice, once in the trading account and again in the balance sheet. So that's all about the adjustments. Now look at the trial balance. We'll see the treatment of this item. Stock in trade at the beginning, that is first item in the trading account, 2 opening stock 15,000. Purchases, debit side of trading account, purchases 1,02,500, less returns 2,500 are purchases return, that should be deducted, and further adjustment should be made to purchase account and the net value should be shown to the outer column. And then sales, it is coming to the credit side of trading account. Then returns of 2000. Sales are credit balance, so sales returns are debit balance. 2000 should be deducted. And then again you have to deduct the sale or return transaction, the invoice price of rupees 5000. So that should be deducted. Returns I already told you. Wages are debited to trading account. Carriage on purchase debited to trading account. Discounts, debit is discount allowed, will be debited to profit and loss account. Discount credit, it is income, so it should be credited to profit and loss account. Salaries and expense, general expenses, these are debited to profit and loss account. Prepaid insurance, it is a representative personal account, should come to the asset side of the balance sheet. Only one treatment. Insurance should be debited to profit and loss account, and no question of deducting prepaid insurance because insurance balance is after deducting prepaid insurance. Income tax paid, it is taken as drawings, so in the balance sheet from capital you have to deduct. Building, asset side of balance sheet. Furniture, asset side of balance sheet. Lighting, it is this is coming to the profit and loss account unless it is shown factory lighting. Debtors and creditors. Debtors to the asset side, creditors to the liability side. Adjustments are to be made. Depreciation, this will be treated only once in the profit and loss account. Outstanding salaries will come to the liability side, representative personal account. Bills receivable, asset side, bills payable, liability side. Drawings should be deducted from capital, and capital will appear on the liability side of the balance sheet. From that, you have to deduct the drawings. Similarly, further items there which is taken as drawings. So total drawing should be deducted from capital. The bank balance will come to the asset side of the balance sheet. Then the rent will be a debit balance, so debit side of profit and loss account. Machinery will come to the asset side of the balance sheet. Now let us look at the profit and loss account prepared here, trading and profit and loss account. See, the calculations are made, and I have prepared the trading and profit and loss account. You just go through. Debit side, to opening stock 15,000, purchases 1,02,500, purchase returns 2,500 should be deducted, private purchases should be deducted, so 97,500. Then credit purchases not recorded but from Ganesh stores, so that is added 2,500. As a result, net purchases are 1 lakh. So purchase return should be deducted. Then private purchase, which are considered as drawings, should be deducted. Whereas these are not added to purchases, should be added now. That's not recorded in the books of account. Wages, direct expense, carriage and purchase, direct expense. Look at the credit side. Sales 1,77,000. Sales returns 2,000 should be deducted. Goods sent on sale or return basis at invoice price should be deducted. So net sales are 1,70,000. Closing stock is given 35,000. To that, goods sent on sale or return basis cost value should be deducted. So 5,000 into 1/5, you will get 1,000 profit. Selling price minus profit is equal to cost. So 35,000 minus 4,000. Sorry, add 4,000 is equal to 39,000. So 2,09,000 is the total, and balancing figure is 81,500. So to profit and loss account, within bracket gross profit carried down is the balancing value, and that is brought down to trading account 81,500. Same here is taken here, and discount credit is taken here to the credit side. Salaries no adjustment as it is. Discount debit it's discount allowed. General expenses, insurance, lighting, rent, bad debt, it is shown directly to the outer column. Then provision for bad debts 5% of 18,500. Note has been separately given. After all adjustments, 5% is created on the closing debtors. So that comes to 925. To depreciation 5,000. Okay, then balancing figure is 52,075 rupees. Okay, balance sheet. So prepaid insurance will come to the asset side. Bank balance 9,000. Bills receivable 5,000. Dishonored is 2,000. So deducted to that extent. So 3,000. Sundry debtors 22,500. Bills dishonored are added. So again 24,500. The goods sent on sale or return basis at invoice price of is 5,000 should be deducted. So 19,500 is heading. Then bad debts given in the adjustment should be deducted 1,000, so 18,500. On that you have to create provision for bad and doubtful debts at the rate of 5%, that comes to 925. As a result, net our final balance of sundry debtors on the outer column of the balance sheet is 17,575. Closing stock is 35,000 and goods sent on sale or return basis 4,000. Together 39,000. Furniture 10,000. Machinery 50,000. Buildings 50,000. Look at the liability side. outstanding salaries 2000, bills payable 4500, creditors 25,000. To that you have to add unrecorded credit purchases from Ganesh Stores 2500. So purchase from Ganesh Stores, that is credit purchase, that is included under sundry creditors 27,500. The capital at the beginning is 1 lakh. Net profits of 52,075. Drawings, say already given in the trial balance 3,000. To that additional drawings, that is private purchase 2,500, and even income tax is taken as drawings. So to get a 7,000 is deducted from this value. So net capital is like 45,075. And if you go for totaling of balance sheet, total is 1,79,075. It tallies. Now see the calculation of provision or reserve for doubtful debts. Sundry debtors as per trial balance is 22,500. Bills receivable is honored, so 2,000. So balance increases to 24,500. Goods sent on sale or return basis, that is cancelled now. So 5,000 should be deducted, because when you send the goods and treat that as sales, debtors account is debited and sales account is credited. When you reverse the entry, it should be deducted. So 5,000 is deducted. And values given in the adjustment is deducted 1,000. So 18,500 is the balance after all these adjustments. On that you are creating 5% reserve. So 5% of that is 925. Now look at the treatment of return, sale or return transaction. 1/5 of invoice sale price should be deducted from sales on the credit side of the trading account, and from debtors on the asset side of the balance sheet. That's 5,000 rupees. Okay. Then sorry, invoice price should be deducted. Invoice price should be deducted, not 1/5 of invoice price. So invoice price should be deducted from sales on the credit side of trading account, and from the debtors on the asset side of the balance sheet. This is the invoice price. Okay, not 1/5 of, it is invoice price. Okay. Cost price of the goods sent on sale or return basis should be added to closing stock and shown on the credit side of the trading account and asset side of the balance sheet. How it is calculated? See here, 1/5 of 5,000 is 1,000. Cost of the goods sent on sale or return basis is equal to 5,000 minus 1,000 is equal to 4,000. So 5,000 is deducted from sales and debtors, and then 4,000 is added to closing stock, which will appear in the trading account credit side and balance sheet asset side. Have you got the cost price? Selling price minus profit is equal to cost. Private purchases are deducted from purchases in the trading account and added to drawings in the balance sheet. Credit purchases recorded in the books are added to purchases in the trading account and added to creditors account on the liability side of the balance sheet. Debtors are debited to profit loss account and deducted from debtors on the asset side of the balance sheet. Provision for doubtful debt is calculated after all adjustments to debtors. It is debited to profit and loss account and deducted from debtors on the asset side of the balance sheet. So, thank you very much.